With this ridiculous early March blizzard hitting the Northeast right now, I think it's the perfect time to check in with Polaris, the nation's #1 maker of snowmobiles, which also does a lot of business producing all-terrain vehicles and motorcycles. Here's a stock that can be a real wild trader. After spending a couple of years lost in the wilderness, Polaris caught fire in 2017, rallied more than 50% thanks to some fabulous sales and earnings growth. The stock put on another $10 in January before peaking along with the rest of the market. Polaris had the misfortune of reporting on January 30th, right as the whole asset class was rolling over. The company's actual quarterly results were solid, a small earnings beat on top of a larger revenue beat, but the guidance did scare some people. Management forecasted only 3 to 5% sales growth for 2018. Wall Street was looking for a little better. In response, the stock plunged from 134 to 116 on the news, didn't bottom out until it hit 102 about a month ago. Since then, though, it's been bouncing right back. Now trading at 119, it's still off its highs. Plus, you got to wonder if Polaris is the kind of domestic manufacturer that could get hurt if you get into kind of full-blown trade war so many commentators are now fretting about. Even as I think that's pretty unlikely. Can the stock keep rebounding? Let's take a closer look with Scott Wine. He's the chairman and CEO of Polaris Industries. Get a better sense of where his company's headed. Mr. Wine, welcome back to Mad Money.
Yeah,
good to see you. Good to see you. I got to tell you, you are the man of the hour. We got tariffs against Harley-Davidson. Maybe they go after you one day. We got a snowstorm. Holy cow, could help the quarter tremendously. And I know from the last quarter that you thought it might be stupid if they mess with NAFTA, but even that could be on the front burner. You have so much happening. What are you in control of and what can't you control?
You know, we design our vehicles to deal with adversity, and we try to run our company ready to deal with adversity. And none of these are things that we can't overcome. We'll manage them. The tariffs, for instance, it's about a $330 million total spend for aluminum and steel for us. A 1% increase, $3 million we can handle. It's all the repercussions that would be difficult, but we've built a team and we've built a company that can handle a lot of adversity.
Now, you guys are great in motorcycles. They're targeting Harley in the EU. They're not targeting you, right?
They're suggesting that they're going to target Harley. Okay. You know, remember, all of this is yet to be seen exactly what happens. We certainly do not want a trade war. Our Indian business, as you mentioned earlier, is growing tremendously, both here in North America, also in Europe. So we wouldn't want to see that. And the one thing we've seen from this administration is a very pro-growth, pro-jobs agenda. And I think that over time, they're going to get back to that sort of thing with trade as well.
Pro-growth, pro-jobs, and also pro-compensation. You've done some pretty amazing things for your workers.
You know, I had to laugh a little bit with the tax policy change, which we applaud from a corporate perspective. You know, there were companies that talked about $1,000 for their employees on a one-time basis. We had a profit-sharing day. It's really a bonus program, but we gave out over $90 million of bonus checks and ESOP to our employees last Friday.
So they're involved, they're playing right alongside you, and they win if you win.
They are owners in the company, and really they provide the best advice on how we run the company better.
Now, they can't run the weather, though. And you said, and I thought you were too hard on yourself, you had an unexpected and disappointing quarter, but it was because of the weather.
The weather wasn't helpful, but we don't like to make excuses. I mean, we play in industries that benefit when the weather is good, and sometimes it's more difficult. We like days like today here in the Northeast. We'll sell a few snowmobiles. I was in Orlando earlier with our snow team and all of our snow dealers and launched the most advanced two-stroke engine technology, a new 850 Patriot engine, a bunch of new snowmobiles. And what we found is that innovation sells in this industry, and we try to lead in that. We'll spend about $260 million on research and development this year.
To make what? I mean, how special versus the other guys?
Well, I mean, it's a very competitive industry. As you know, we play against some well-heeled, very strong players. But we understand what the customer wants, and we try to build that into our products. And I think that's why Indian has grown, you know, literally from nothing, and it'd be a $500 million business here pretty soon for us. And we think we've got a long, long way to go.
Your demographic for Indian is quite different from Harley's, isn't it?
It's a little bit different. I mean, one of the things we did early on was invest in the Scout business, and then we invested in flat track racing. And you go to a flat track race, and I'm one of the older guys there. So that's helping us pull in a younger demographic. But our design team, our price points are pretty good. It's a really competitive market, and we like our chances.
How are these adjacent markets, oil and gas and ag?
Oil and gas obviously have come down off their highs. You know, oil, when fracking was really going at its best in 2014, almost the perfect Polaris customer. You get these young men making a lot of money. They bought a lot of machines. They've become much more efficient in how they frack, don't need quite as much labor. So those markets are stabilizing, and it's good for us.
How come you're not grousing about that steel? I mean, so many of these producers were complaining. They did get some good tax breaks, corporate tax breaks, but they were complaining. They were just saying, hey, come on, man, this is really hurting our business. Why aren't you saying that?
I mean, I believe that ultimately trade should be fair, and a lot of times our agreements aren't fair for everybody. So trying to get that in balance is probably helpful. We like our chances to compete. We understand where we're good, we understand where we're not good, and we want a fair trade environment, and ultimately that's what we'll speak for.
Okay, you're a Navy guy, okay? And what I'm hearing from you is what I hear from a lot of people who have been in the service, which is like, hey, listen, we have to deal with adversity, and we're going to deal with the hand that we've been given, and we're not complainers.
No, I mean, we will certainly lobby to get things that work in our favor, but, you know, we truly have a remarkable team at all levels of the company. We've got about 11,000 employees, and, you know, they're owners of the company, and really a really strong leadership team across the board. And we don't like all of the adversity that comes our way, but we like the challenge.
Last thing, the U.S. consumer is pretty strong.
You know, obviously the tax policy was very helpful for the consumer. We think some of the regulatory relief over the last year has been helpful for the consumer, and we're encouraged by what the year could bring.
Excellent. Well, look, I think that you have triumphed over a lot of adversity, particularly the weather, and your stock is the cheapest it's been in a long time. Okay, that's Scott Wines, Chairman and CEO of Polaris, PII. Stick with Cramer. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.